Good morning, United Kingdom. I think we're live, I've been told. We're live at 6 seconds to live. So, good morning to Lakhi Singh, the property fixer.
Morning, everybody. How you doing?
Kingdom, the gentleman, the mover, the shoover, the shaman, who knows everyone in the square mile. Person to look out for if you're looking for solutions. And we've also got excellent, very entertaining Mr. Bob Singh with the depth of knowledge on regulated lending, particularly mortgages. So we're going to have today's sort of session, topic being continued from yesterday, the saying of the week, that keep your eye on the goal or on the target and trust the process. And if that's not what it is, it's something like that. And the topic for today and discussion is going to be how you're going to get out of negative debt. But before we start that, we're going to have a general discussion. Lakhi Singh, good morning. How are you doing?
Morning.
Drive time, 8 a.m., 9 a.m., every morning, as usual, sharp and ready to jump to action. How's this morning in London? What's the weather like? How's the mood? You're going into second day of the week, new month, nearly the end of the year. Donald Trump, obviously, unfortunately, has come down with the virus. Tell me what's happening in the United Kingdom. How is it going?
Well, things don't seem to be getting any better. COVID-19 is still quite a phenomenon because the numbers are double. Well, still 25 deaths per week, rather than at the height of 250 deaths a day. So I think the government is still clamping down on say what you call it, the lockdown, and making sure that people follow the regs. So I think it's getting worse in France and Spain, actually. So they're doing a lot more out there now to possibly close down bars and restaurants altogether, because it's actually getting worse. So I think there's a sort of state of panic the way the media is reporting everything. So it's not looking good. Like I said the other day, yesterday, that walked into Pinner High Street the other day, and nearly all the large restaurants are closed down: Zuzi, Pizza Express, Carluccio's, etc., etc. So it is quite a weird phenomena, and I think a lot of people are scared out there.
Okay, Bob, sir, how are you doing?
Morning.
You're
how are you?
Also on good morning. Yeah, good. Tell us, sir, what is and I think you're out in Denham, which is literally just outside of the M25. So you're literally kissing the M25, I think. Is that right, Denham?
Yeah, I can see it from here.
In the greens. So
I can see it
tell
from
me,
here. Yeah.
You can see it from here. Excellent.
No, we're actually we're just within the border of the M25, which is literally a mile from my house. So we're
you're in Denham, but inside the M25 County. Denham.
Yeah, we're South Buckinghamshire, so we're just on the border between Middlesex and South
right.
Bucks.
Okay.
But when the Tories changed the boundaries, they kept Denham into their boundary. So obviously it's a very, very heavily conservative area. So they took the boundary all the way up to Uxbridge.
You fall right. So you fall into Hillingdon, then, do you?
No, Denham, South Buckinghamshire.
South Bucks, right? Okay.
Yeah.
So tell me what's the mood like? What's the weather like in Denham then?
Weather is a bit cloudy. I can see possibly some rain later on today. It's been like this all this week, hasn't it? It's been a bit dreary, a bit overcast. Not the sort of weather we want, but that's the way it is, isn't it? Winter's on its way, isn't it?
Yeah, I think it's going to hit us quite early this time. A lot of people are saying the winter flu or the bug is going to be on us quite soon. And this time, the prediction is that it's going to be a long winter and quite a sort of an early winter. Is that right?
I have my long johns ready, so that's good.
Excellent. Right. Okay. There's a bit of secret there from Bob, and the secrets to his success, and that is long johns. So you need to wear long johns if you want to get into mortgage broking. A good tip there. Right. So Donald Trump come down with COVID. What do you think about it, sir? Bob, what's your feeling? Do you think it's a gimmick? Do you think it's genuine? And if it's either one, what does that prove?
I mean, never believe anything in politics. That's what I say, because at the top level, anything can happen, and the public can be easily hoodwinked into believing one thing when it's actually something else. Now, Trump is the master of deception. You know, he says one thing, does something else, and thinks something else. So it could have been a election gimmick, I don't know, but the fact he was away, the fact he has had treatment means he probably was suffering from COVID, but he's made a remarkable recovery much sooner than our Boris did. He's already out apparently and waving to the crowds.
Yeah.
You know? So it's quite miraculous. So whatever drugs he was given, I think everybody else should get them as well.
Well, there you hit the nail on the head, sir. Maybe it was a bit of marketing. As I say, no such thing as bad marketing. Maybe that will be the underlying reason that the drugs he's used are the ones that will be promoted. Lakhi Singh, what's your take on it? Do you think it was a gimmick, or do you think it was real? What benefit did it have?
I think the general sentiment on the internet and with most people I know, they just think it's far too much of a coincidence, like 3 weeks before the election, that so I think there's a general sentiment is that he's looking for some sort of sympathy vote. How serious it is and what it actually is, I don't know. It could just be like a minor cold, and they're making something a bit more out of it than it should be. That bit I don't know. So if anything, they should probably get an independent person to test it, to let the public really know whether it's really going on or whether it's just a mask for marketing and PR. But I think he's done well out of it, because it's worked. Whatever he wanted to do, people are going to be empathetic to it, and it's certainly made a bit of a dent in terms of people thinking out there. Okay,
I mean, the point is, he is Mr. What was it now? The business show. What was it called?
The Apprentice.
The Apprentice. That's right. So he knows how to manipulate the camera. So I think there could be an element of that there. And yes, too close to the elections makes it a bit too obvious. But having said that, he is behind. If anything, there is a downside to him getting in, and that is that what he was doing has shown even more clearly extreme irresponsibility. Being the president of the country, you can't afford to do that. They're even talking about the fact that he sat in the beast with the flu, with the virus, and he's probably put all of his agents at severe risk, because it's actually apparently the beast has been designed to be nuclear bomb protected. So any nuclear missile that goes off, or chemical attack, the beast is supposed to be totally sealed off supposed to be armored plated from every angle. I think it's about a couple of tons in weight. And he had his security guys in there with him, basically ensuring there was no way that the virus was going to get out, which means there was only one option, and that's the guys who came in to sit with him have been potentially put at risk. But anyhow, leaving that aside, okay, so we know he's a bit of a game show host. He knows how to play the camera. We have Sonia this morning. We have Sejal this morning. Amar Ali this morning. We have Smith and Safraz Ahmed. All of them saying a big high shout out to the drive time. Excellent. Right. So keep your eye on the goal and trust the process. Can we have your thoughts on this, Bob? Trusting the process. When you put in mortgage applications, is that what you do? Do you trust the process, or do you find the process sometimes gets confused, because ultimately the process without people isn't AI, isn't it really? So AI isn't what we're talking about. We're talking about a process that people manage. So you put an application in for someone's mortgage account. Do you get hiccups? Do you get misunderstandings? Do you get people come back with weird questions about the application, even though it's quite straightforward? Do you get lenders asking ridiculous questions that seem somewhat without foundation, don't have any sense behind them? Or is the process to be, can you trust the process? Can you just say, right, keep your eye on the goal. So when you put an application in, your eye on the goal is to get the application approved and then trust the process. Can that work, sir?
Sorry, I lost the reception. So is that question to me or Lakhi?
So it's to you.
Okay, fine. Okay. Yeah. In this world, in this climate, expect the unexpected. Because what's happening right now is there's a lot of junior underwriters in the market. They've just been brought in because lender volumes are pretty high. They can't process it as quick as it's coming in. So we are getting ridiculous decisions and quite unnecessary declines because these people have no life experience in underwriting. They're treating it as a bit of a tick box exercise. There's no common sense applied to the applications at all in most cases. And, we tear our hair out. It's no wonder.
Okay, so you're saying there is, what they've got in the tick box isn't what's in the application. So there is it does become difficult, doesn't it? You can't really trust the process, because that means you probably have lots of no's when they should have been legitimately a yes. Is that right?
We have lots of no's and a lot of delayed yeses. You literally have to fight your corner for the client, explain the whole situation phrase by phrase so they understand it. Because let's face it, the underwriters aren't accountants. They just look at the basic figures on the balance sheet and sort of decide whether, they're sort of earning the right sort of money.
It makes financial sense. Okay. Lakhi Singh, same question to you, sir. You've got a process, right? And you've got your eye on the target. It's a commercial loan application, and you've got to approve it. Do you have to just trust the process, or are you having to do some dancing? Do you need to tap dance?
What's happened is the commercial lending market, it's always been a bit touch and go anyway. I'm sure Bob would agree. So it's always been a bit tough to get bridging finance through, because lenders tend to be quite picky. They can be afford to be quite picky and choosy, especially if the assets are problematic or the clients are problematic because they've got bad debts, or they've got some bankruptcy issues, CCJs, defaults. Because we tend to do a lot of difficult cases, the general theme of them tends to be that I usually have non-expectation. So I always have about at least 4 or 5 options lined up anyway. So what's happening now in the commercial mortgage market, commercial bridging market, you could call it, or development funding market, is it's never a yes until the money's in the bank.
Yeah.
Because they could pull out any time. Because if they don't like something, they can pick and choose really, the type of client they want. A lot of bridging companies are also becoming a lot more selective now. So if they can give a clean client with a large asset-based money, they rather do that than to be giving money to somebody who's half-baked, who's got CCJ and it's quite a high loan to value, but they've got no credentials. So what's happened is we've had to dig deeper and find a wider panel of private lenders in the last 2 years. But in anticipation of this problem occurring in the market, we've already got a panel of about 50 private lenders that we can turn to. But ours is become more boutique lending, which is always the case before, but it's become even more so now. So nearly every deal I'm doing is tailor-made to the client.
Okay, I mean, we talk about something which is very important, central to all applications, whether it's commercial or it's residential or regulated lending, let's say. A credit report, how important is that? Because a lot of banks are not really looking at credit files anymore for their customers, and they're just looking at the customer paying their bills properly, paying the credit card off if they've got a loan with the bank, and they're not really looking at their credit report, even though they may have CCJs, etc. So is that the same in the regulated market, Bob? Are you finding certain lenders will ignore minor, omissions on the credit file? And can they be corrected? Because I think the credit file is one of the most fundamental documents, but yet it's so archaic, it hardly has any, it lacks sophistication, where you have people screaming down the phone, trying to explain to them that the CCJ has been wrongly placed on, or it's a CCJ that relates to a brother who's got the same initials, and by mistake they've had it put on their credit file. And I also recall certain people I spoke to had CCJs issued on their name, and they were not the defaulting party. So the judgment was in favor of them, but for some unknown reason, the court had sent off the register of the county court judgments on their name rather than on the defaulter. So how is the credit file market, has that changed? Is it still archaic? Is it still difficult to fix something, even if it's a minor telephone bill that was paid, but they think it wasn't paid, and it's hindering applications? Bob, first to you, because I think the credit file probably has more resonance or more importance on residential or regulated lending than it does on commercial. So tell me.
Yeah, absolutely. The credit file is certainly in the UK the be-all and end-all of your financial future. Without a good credit file, you're not really going to get too far. Now, there's quite a few credit referencing agencies that record all the data about you, how well, whether you pay your bills and mortgages on time and that sort of thing. And you're right, sometimes the data is actually inaccurate. But it's incumbent on the person to monitor their file. It shouldn't really come as a surprise if you've got a CCJ, because if you're looking to buy in the next 6 months, 1 year, the first thing you need to really start off with is do your credit search and make sure that's clear, because there are mistakes. Mistakes do happen, as you rightly say. Brother with the same initials or whatever. We had a case last week where the person was deemed to be politically exposed. You know, their name,
Right.
their
Okay.
name matched somebody in the Pakistan, you know, political circles.
Excellent.
So, and the client said, you know, I've never been to Pakistan. You know, how the hell did this happen? So,
Excellent.
she had,
Okay.
she had to go and tell them that she's not a politically exposed person and get that marker removed, because the lender surely would have picked it up and questioned it, because, you know, lenders don't
Well,
lend
that's
to
an
politically
interesting
exposed
topic,
people.
Bob. Bob, you brought another interesting topic. What type of additional things are brought into your credit file? Because I remember there was a issue, and we'll go over to Lakhi Singh and ask him what he says about it. There was a time that your credit file was somewhat sank to you. It was your personal credit file, and it wasn't really supposed to be shared by the banks. But apparently, I think there's been a slight change in data protection, where the banks actually can see your credit file, and they can actually see all of the lending that you have in terms of, in particular, property lending, apart from credit cards. Is that true? Is this now opened up? The banks are able to look at your credit file.
With your authority, yes. So if you've opened a bank account, you've signed on the dotted line to say they can do a search whenever they feel like it.
If you a bank account, you're saying?
Yeah, if you've opened a bank account, you have signed up for them to do a credit search on you whenever you make an application, or whenever they feel like it.
The fact you've got a bank account that allows the bank to do a search on your credit file.
Yeah, read the terms and conditions.
Okay. No. There's actually a lot of the bank terms, I totally agree, have something that's called the power of attorney clause. But really, there is a debate about that that's challengeable, and that the power of attorney clause can only be regarded as true and valid if it is enacted and also registered in the Department of, is it called the Department of Protection? Is that right?
Probate registry.
Yeah. Okay. So what you're saying is, effectively, if you've got a bank account, the banks can check your entire credit file. Is that right?
It is. And obviously, with technology now moving fast forward, you've got open banking coming in as well. So banks can see across all the banks and, you know, see what accounts you've got.
Excelente. So the only thing that's really personal to you now, Bob, is the underwear and the choice that you have in the morning.
Or the long
johns. Right?
Or the long
johns. Yeah, we know the secret now. Yes. Lakhi Singh, talking to long johns, do you wear long johns?
No, I don't.
You don't? You don't what?
Slightly personal question first thing in the morning.
You don't fancy them, you say? What did you say? We didn't say whether you fancy them. We said, do you wear them?
He said he doesn't wear any.
You don't wear any. Okay, everyone knows now it's all free movement. I like that. Okay.
Commando
Scottish culture.
Another secret, the Lakhi Singh success, and it's free, born free, like the lion in The Lion King, Simba, like that. Okay. So Lakhi Singh, with the fact that you are free thinking, what's your take on credit file? Because I think there was an issue once it first opened up. A lot of the clients were being told that their credit file was being checked and they weren't aware of it. And what Bob says, technically, the fact that you got an account means they can check your credit file. So there's no real restriction to the banks. But what does that say for data protection? Because data protection is slightly different now, isn't it?
I think the worrying thought, this is the point that we may need to touch upon today anyway, is that when we're talking about negative equity or people with large portfolios, what's been happening, Bob, is in our experience, I think it's about 10 years ago, when we started litigating on behalf of certain clients to deal with shortfall matters when the property's been sold. The banks, what they were doing is going to the credit file of the buy-to-let client, and then checking out what other properties they've got to try and see what collateral they've got, so they could go after the collateral, and then
Okay.
and using the knowledge they've got about the client, obviously, I suppose for them it's open information, to then decide really how they're going to secure their debt. And I think a lot of the clients were taken by surprise when they had some sort of court order to try and take them to court to try and take charges over additional assets. I think something along those lines. I think a lot of clients aren't aware that banks have complete access to everything that's going on.
Okay, this goes back to negative equity as well, isn't it? We had a conversation. That's the underlying topic. The real worrying thing is, and I think it was, we were talking, was it Ninda? Was it Bob? I can't remember. We were talking about the fact that debt provisioning. So in the back office, the banks write the debt down. So really, where you owe them $1 million, you actually only owe them $500,000, but they're still chasing you for the $4 million. So they're relying upon a contract, even though in accounting terms, they've written the debt down. When they get, say, 600,000 off you, they technically are showing £100,000 profit. Why is it so draconian? Why is it always set against it? And how do people then write off negative debt, Lakhi? What is unique about your solution in assisting people to write off the negative debt? Are you talking to the banks directly and negotiating with their accountants the writing down of that debt so that they can walk away with a clean bill of health, the deed of settlement, as you used the terminology a few weeks ago, which is like saying full and final settlement? Before we continue, I'm going to ask, is it, let me just find out. Mr. Vikram says the Three Musketeers of property are talking about the Don, and I believe when they're talking about the Don, they're talking about Lakhi Singh, the property fixer. We didn't have, obviously, Mr. Trump on. So, yeah, so he says the three of us talking about the Don, talking about Lakhi Singh, the property fixer, the Don. So, yeah, Lakhi Singh, tell me, what is it you're doing? Are you talking to the banks directly and telling them, hey, guys, can you write down this debt? You've already written it off your debt ledger. Obviously, it's only now $500,000. Can we please get the benefit to our client? Is that what you're doing?
It's not quite as simple as that. What we have to do is I can't really be involved in that process. It's a sort of regulated process through an IVA. But you can sort of say the process does that in a different way, which is that it forces the bank to work on the client's behalf for a change rather than on the bank's behalf. So whether it's, I don't think it's, how it impacts debt provisioning, I don't know how that would work. But I know that the results we've achieved in terms of negotiating the debt based upon the IVA and how that's structured has meant that over 500 buy-to-let clients who've had negative equity problems have benefited from this solution. So getting a deed of settlement, getting it written off works, but the mechanics are not something that we would sort of divulge to the public because it's a process that's carried out in a very regulated and regulatory administration within the confines of a lot of legislation as well. So everything's done at a very professional level using all the right tools.
Yeah.
So what we do, which is a bit different from anybody, is that we do a stress test or an initial called an asset appraisal, which determines to us really what's the likelihood of success. And if we think that it's not going to be successful for whatever reason, then we tell the client accordingly. And if they still want to proceed, then there's never any misunderstanding, because there's always clarity in the beginning of the process is more important than halfway through, when there may be some sort of a potential inability to help them to achieve their result.
Okay, just hold that thought there. Got a hello, Howard, from a Vikram as well, and from Maxine. Both say hi, and Imran as well. I think Imran as well says hi to everyone. Okay, Bob, you're doing similar things, obviously, in the regulated world. So you go through a risk assessment, or you go through an asset and liability sheet. Are you finding people are somewhat in their own position, looking to try and get at the negative equity trap by trying to refinance their other assets to pay down the loan to values, or raise money to pay the shortfall in a sale of a property that they've realized was negatively geared? Have you had this problem on the residential side, or at least on regulated mortgages, but people trying to pay off their debts in releasing equity from their properties?
We don't see negative equity as much as maybe Lakhi does in the regulated world, because the whole purpose of regulation is to make sure your mortgage is affordable, for the next 15, 20 years, because new mortgages are stressed at 7% interest rate, whereas you're actually paying 2%. So, negative equity isn't going to affect most people on the regulated side, because firstly, they put down a deposit, and secondly, the market's been pretty good for the last 15, 20 years here. So I see that a lot less here, to be honest with you. But I have seen it in portfolios, I think, which is where obviously I think Lakhi sees it as well. People who maybe have bought properties in the north of England, I've seen certainly a lot of negative equity situations in Sheffield and Hull, and those sort of areas. But what can you do? Apart from going down the Lakhi route and doing a bit of an arrangement, the other way is to, as you rightly say, restructure the whole portfolio, release money from where you can to reduce the debt on the one that you are in negative equity on, so that so you do build in some sort of equity, because certainly on the buy-to-let scene, and anybody who has more than 3 properties is termed a portfolio landlord. And then the whole portfolio is stressed. They look at the whole portfolio. So even if there's one property that's not performing, it's likely to bring down the whole portfolio, because they want all the portfolio to be performing. And even if one property is in negative equity, the whole plan fails. So we have to address those issues before we take that case to a bank.
Okay, so with those announcements, I think we spoke about it last time, but we didn't get our teeth into the topic. About 1 million, I think, plus homeowners that were sitting on an interest-only mortgage without a payment vehicle. We spoke to, I think it was yourself we spoke to.
It was, yeah.
About the endowment policy and the fact that it failed, et cetera, et cetera. But tell me, how are those people going to be assisted? Is there an assistance package out there for people who are going to find, when the interest rates do go up, that they have some fallback position? Will the government give them some type of reprieve, or will they be given payment holidays? How are they going to manage even a mortgage that's going to become unaffordable?
Yeah.
I remember a lot of these people went up a ladder, didn't they? They left their 2 bedrooms for 3, and 3 for 4, and 4 for 5, and 5 for a mansion or whatever, and they took out larger mortgages, and they took them out on interest, expecting the endowment or the vehicle to pay for the difference in the end of term. But because that's collapsed, so what advice have you got for those people who are sitting on mortgages that are going to become unaffordable? What do they do?
I think they need to take action rather swiftly, because time doesn't stop. Even if you've had warning letters from the bank telling you your mortgage is due to be repaid, most people still ignore them. They think, they're sort of immune from any action that the bank could take. The FCA has directed the banks to be considerate and understanding. The last thing the bank wants is really to force a sale, but they will give you every option to address your issue. Endowment claims are now closed. You can't claim against the missold endowment.
Exactly. Yeah.
So, if you've still got that endowment, yes, you could cash it in. You could bring down the balance, of course. But you should be really assessing what your options are, because if genuinely you can't move, genuinely you can't sell, genuinely you have no other assets to bring down or pay off that loan, there is going to come a time when the bank is going to say, okay, enough is enough. We've given you time to sell. We've given you time to sort things out. Even though the mortgage is, sort of finished, we want our money back. So,
right. So you tell me, in that situation, how long does a bank normally give you then, if it's a residential mortgage?
I mean,
how long will the bank
I have done some of these cases where we have actually successfully extended their mortgage. So rather than try and pay it back, we've negotiated an extension of say 5 years to the actual term, which has given them a bit of a breathing space and plan ahead.
Yes.
But if you're already age 70 and you've come to the end of your mortgage, the bank will give you maybe 1 year, 18 months to try and sell beyond that point. But there will come a time, unless legislation comes in, unless you've got the income in the background or the pensions in the background to take out either a retirement interest only mortgage, which is based on your pension income, or you've got the last resort of an equity release mortgage. If
you spoke about them last time, equity release. So I think, is it 55 plus, and they do a calculation based upon how many years they think you're going to be on the planet.
Absolutely.
Based upon that, they give you a percentage release from the equity. And can that be from properties that have mortgages on them, or has it got to be only properties that are incumbent or unincumbent? Sorry.
Yeah, it can be both. I mean, it all depends on the loan to value, and as you rightly said, how old you are and how long you're expected to live. So your health comes into play when they sort of look at these things. So, but they don't lend big money because they know that that debt will be there for the next 20, 30 years, possibly, accruing interest at, say, 4 or 5% a year. And so they don't lend big loan to values. But so this will only work if you're, for example, 20% geared or 25% geared as a 60, 65-year-old. They want
yes, it's only going to work if you've got a low loan to value, and you pay off the loan to value, you pay off the mortgage that's existent, you technically get a lifetime mortgage at a very reasonable rate. Is that right?
Yeah. The rates are around the 4 or 5% level at the moment, depending on your equity situation. So it's no longer easy. It's a regulated field. I mean, we're not licensed to advise on equity release, but I'm doing my exams. But certainly, you need to talk to an expert who can guide you properly on this. But that is probably the last resort, because what you're doing there is you're signing your house to the lender effectively. But on the plus side, you're not going to make any more payments, and you're not going to be evicted. So you've got that peace of mind as well.
So that is a solution potentially for something. Yeah. Okay. Lakhi Singh, have you got anything on the commercial side that you could call similar to what Bob's talking about, equity release? And is that a solution to negative equity, or not negative equity? That's not the solution. The point is releasing money from your portfolio.
No, there's no such thing, because commercial lending is unregulated, and it relates to commercial assets only. Because anything that is related to somebody living in their house is regulated. Anybody that's commercial wouldn't really touch that sort of thing, because they would be then potentially holding themselves liable under the is it the Financial Conduct Authority?
Yeah.
Is that right, Bob? Yeah.
Yeah,
So
absolutely.
the Financial Conduct Authority is very, very active in terms of monitoring any microcosm of anybody infringing any of their regulations or going above and beyond the commercial side and overspilling into regulated. So that's one point. So there isn't really anything. I mean, what is happening is that you're getting a lot of mortgage prisoners, and I think it's probably worth getting Bob to elaborate of really what's happening with the phenomenon of mortgage prisoners, because that's a sort of you could call it an in-betweener of negative equity, and you know, there could be brothers and sisters maybe, yeah, mortgage prisoners and negative equity prisoner.
Okay, let's throw the question back to Bob. You're obviously quite a seasoned mortgage broker, and you're in it's Uxbridge, I think, so in Hillingdon. Tell me, what is the landscape when it comes to mortgages now? We understand that obviously there are few banks lending. Banks are very quick to withdraw from the market. They test market certain products, and then they are dipping in and out of the market. There's no week that probably goes by with a clarity of a mortgage product that's going to be available for the long term. So what is a mortgage prisoner that Lakhi's talking about, and do you have people like that?
Yeah.
And what are you
We
doing?
do, yeah. Mortgage prisoners are people who've taken out a mortgage with one of the banks that maybe stopped lending at the last crash, or you're with somebody who's securitized their debt, because once banks lend, 500 million or £1 billion on a book, they tend to sell it off to an investor. They tend to sell it off to another bank and get their money back. So that debt is assigned over to the new lender. Now, the new lender is obliged to honor your interest rate that you were paying with the previous lender, but what they tend not to do is offer you any more products. So once you come off the fixed rate or variable rate or whatever, you end up paying the standard variable rate, which is 5% in some cases, and they don't give you any option of a product transfer. And you're a prisoner because your income or status has changed since you took out the mortgage, and you can no longer remortgage away from that lender, so you're stuck. So if your income has stopped, your income is lower than what it was when you took out the mortgage, you're going to be stuck and paying 5% when the rest of the world is paying 1.5% and 2%. So therefore you're imprisoned. But there are talks of the FCA discussing this issue with a few banks and releasing products through certain brokers, where if you can demonstrate that you've been paying that mortgage at 5%, then obviously you're going to be able to pay that mortgage at 2%. So the standard rules of affordability calculations will be thrown out the window. Banks will pretty much be forced to offer these prisoners standard rates like everybody else and treat them fairly as well. So it's early days yet. NatWest is in talks. So NatWest may be one of the first banks to offer mortgage prisoners a product. But that's yet to be seen. The terms aren't out yet, but certainly it will only be available through a few brokers that the FCA has chosen. So there'll be larger firms involved, obviously, and those customers will be able to take out a standard rate mortgage if they can prove they've been paying their mortgage satisfactorily for the last 5-10 years.
Okay,
So
can you tell me, Bob? You're running a mortgage brokerage, I believe, and you probably got staff that are employed by you.
Yes.
Where is your business going? I mean, is your business sort of somewhat on a idle, on a slow burner? Are you still hot on with work? Is it the work has become reduced, but the application times are longer, the queues are longer, therefore the timeline in processing an application has become longer, but you seem to be as busy, but you're not that busy. Where's it going? And have you had to adjust your pricings? Because obviously, if you're not making the volume of business, it's going to have to bend somewhere. So where is it? What you're doing? What are those tricks that people can listen to and get some understanding from you as to how they can look at changing their business model or their pricing structure to remain profitable?
Okay, well, thankfully we're still very busy, and that's, I think, mainly due to the stamp duty holiday. To be honest with you, everybody is wanting to take advantage of that saving. We've got 2 administrators. We're taking on a 3rd, so there's a lot of business still coming in. We rarely discount our price because there's a lot of work involved in the application process. The timelines, as you said, have actually lengthened. So it's no longer that you can get a mortgage within 1 or 2 weeks. It's now 5 to 6 weeks at the absolute minimum. And there are some banks that aren't even looking at your case 6 weeks after submission. I won't give their names, but it is actually absolutely terrible. And banks are coming in and out the market, which is absolutely silly. How can you offer a 90% product for one day and then take it away the next? It's not as if anybody's not as if anybody's waiting for that particular day for to apply, because brokers, we can only apply when we get the business in. So it places a lot of pressure on the broker market to actually get cases in, and then it makes it worse again, because if everybody piles in on one day, then there's another bottleneck in the bank's processing systems. So it doesn't help anyone.
Excellent. Okay, so you haven't compromised in your price, or you haven't increased prices, but you're saying there's still a lot of work that goes in. You're still busy, even though there's a slight bottleneck in applications. So where do you see the mortgage market going? Do you see the banks going back online? Do you think it's all going to fizzle away? Are we going to go into, there's talk of, you're talking about talks. There was talk of the market in the UK changing from traditional, mortgage purchasing to long-term leasing. So the standard AST, the assured short hold tenancy, becoming scrapped, and people actually taking out long-term leases. So you're just taking out an exceptionally long lease. That is the way you're going to be living in your properties. Lakhi Singh, I'm going to come over to you on that. What's your take on it? Is it going to become more of a commercial market? So gone are the days that people buy their mortgages, they stick to their 9 to 5s, they pay off the mortgages at the end of its term, and then they're living in their cozy little pad that they've worked hard the whole of their life. Or is it going to be a bit more like the American market? You take out leases, and it's only going to be the top tier people like yourself with money where your scarf is who are going to be able to purchase.
I think, like you started off the conversation in the morning, first thing Bob Singh said is that expect the unexpected. So certainly the UK market has always sort of just been like 10 or 20 years behind what's happening in America. So whatever's happening in America is probably becoming slowly normalized in the UK. So I think it's inevitable that long leases, these type of things, will come into play, because as we're going into sort of like although this temporary stamp duty bubble that you've got, the whole economy could technically become very weak, and 10 or 20% of people in the UK, if not more, may have to actually go down working in a completely different way than they are now. So I think I've actually heard of what
like go down like in the Terminator Reborn, when everyone goes underground and there's going to be like another world under the sewers, sort of fighting the machines, that type of under.
I think that's quite a good analogy for what could be happening. But I think Bob's probably a better person to answer, actually, because
I think
he's actually got his finger on the pulse on the day-to-day market.
Yeah, I mean, if Labour get in, if you look at their old manifesto, they were advocating 3-year tenancies as a minimum. You know, they don't want 6 months, and they don't want 6 months or 1 year tenancies. They want 3 years,
which is a lease, basically, isn't it? It's no longer a tenancy.
It's basically a lease. Yeah,
a lease.
Yeah.
Okay.
For buy-to-let purposes, lenders will take 2 and 3 year ASTs. Otherwise, anything longer, they consider that to be a lease. So it could be that the market will evolve. You know, people, as tenants want stability. They don't want to be turfed out after 12 months, with their kids and furniture. So I think it'd be a good thing, actually. So it gives the landlord.
Won't it kill your market, Bob? I mean, if people are going to go in for leasing and they're going to get leasing on good terms, and obviously the rental market on the leasing side will probably come down because demand will go up. Won't that kill the mortgage broking market?
No, the market will adapt. The market will adapt. And from a landlord's viewpoint, what better to give a tenant a lease and put a fully repairing, insuring clause in there, so the tenant pays for all the repairs and the insurance.
Excellent, yeah.
Total
okay.
hassle-free letting.
Then if it becomes a lease, Bob, then are you going to what's it now, the TDS schemes and all that stuff, all the heavy regulation, won't that all go out the window then?
No, I think, as I say, lenders will adapt. Leases already exist, by the way. If you give your house to the council, they'll take it on a 5-year lease. So it's not a new concept. It just means at the moment, only local authorities are using it. But, give that weapon to the landlords. I think it'll be quite popular, to be honest with you. I'd love my tenants to pay for their own insurance and repairs and, not call me out when the bulb is fused. I'd love a lease like that. But at the moment, the way the Housing Act tenancy agreements are structured, the landlord is still liable for the repairs and minor issues and maintaining everything in.
Oh yeah, there's a big issue, isn't there, where local council goes in and puts orders. What are they called? They've got a particular name of what they're called. They're like restrictive orders on the landlords, forcing them to undertake thousands of pounds of repairs. And I don't dispute the councils may be right, because some of these rogue landlords, like you were saying, are type of people who put people in their properties but never spend a penny on them. We've got Cam Patel who says that some people are buying these properties and to find out they're on lease, and obviously they can't sell them. But I don't think possibly it works that blindsidedly. The solicitors should really be advising purchasers that the property, especially if it's a flat, will be a lease, and there's certain restrictive clauses on leases. Each lease has been structured in a certain way, but that lease is slightly different to the lease when we're talking about tenant leases. But definitely there's a foundation there. Bob, you're right. If the councils already have 5-year leases, so those documents or those legal precedences are already there. All it takes. Lakhi, what do you say? Do you think it's a good thing?
I think from a tenant point of view, I think it's a good thing, because, like Bob said, if somebody can, they've got a family, they've got furniture, then it probably makes it easier for them to know that they've got a longer term view in terms of staying where they need to stay, either because of schools or the location actually allows them to be too close to work. And also the whole hassle of actually trying to get up and go. 6 months, 12 months, really, if you think about it, doesn't never really ever make any sense from a tenancy point of view, because it just seems like far too short if you really think about it a bit harder. So I think a 3-year, 5-year lease does actually make a lot more sense from a tenant's point of view. From a landlord's point of view, you know, as the whole buy-to-let industry is being filtered out now, so you're getting a lot of professional business people moving into it. Most of them would have an understanding of how retail or office leases work anyway. So the whole idea of actually doing things in that manner is a norm anyway within commercial businesses around offices, retail, industrial blocks that get leased out to companies. So I think in some ways that it may just be a continuity of commercial moving into private in a slightly different way. So it might actually simplify things rather than complicate them.
Sonia says she likes the idea. It obviously has a resonance with the landlords who would like to have tenants in there for longer term. And I think most people, landlords, would like the sound of FIR. And obviously FIR is not a swear word. It's all about making the tenant liable for all the costs of repair. Is that right, Bob? Is that what a lot of landlords would like to hear? FIR to you too. Yeah?
It's FRI.
Okay, then it's even better. FRI to you too.
Yeah. Short for
Right.
Friday. Yeah. Yeah.
So why don't we just give what abbreviation of FR is? Is that
fully
fully
repairing
insured and repair? Oh, it's fully repairing, sure, is it?
Yeah, fully repairing and insuring. FRI.
Okay. Yeah, FRI to you too, sir. You think landlords would like to hear the sound? Sonia likes it anyway. She's picked up on it. And obviously Sonia also asking whether these long-term leases are available. And I think they are available. It's all to do with your tenant, isn't it? Whether they will understand them and whether they'll be comfortable with signing a long-term lease, because that is a commitment, rather than like having a mortgage, isn't it, Bob?
Yeah, and the biggest thing is the lender. Will they be happy with it? Because they don't like anything longer than 3 years. So what you don't want to do is do a lease that contradicts your mortgage terms, because that could cause an issue down the line. So always speak to your mortgage broker, always speak to your bank, and see whether they will allow that sort of lease.
Okay, we've got Property Link who say they like the debate. I think they've taken a fancy to what we're talking about. Obviously, these are important hot topics. I think a lot of the stuff that we talk about is about solutions and things that are there under the noses of lots of landlords, and sometimes landlords don't like to talk about it, but it's good that we talk about it because it gives them an excuse to listen in and try and find out some tangible solutions. Meena Patel says good morning to everyone as well. This morning, we're in the last minute. Lakhi Singh, the property fixer. Lakhi Singh, give us your input. What's your last word on keeping your eye on the prize and trusting the process? Can you really trust the process where lots of different people are involved, or do you need to keep your finger on the pulse like Bob and make sure that you explain to people in that process what is happening so they don't misunderstand applications?
Very quickly, it's impossible to know what's around the corner with anything that's going on, and everything's happening day by day. Lenders are coming in, lenders are going out. There's more lenders going out than coming in. So it's a real hodgepodge. So there's a lot of uncertainty. So my most important message to any of the community now, the alternative business solutions community, is that talk to professionals, talk to Bob Singh, talk to ourselves, find out what the risks are. Don't assume anything. Presumption is the mother of all flip ups, or there's probably different ways of saying it. But so presumption is the biggest issue when it comes to assets. So be very careful out there.
Thank you very much, Lakhi Singh. We're about to close off. Bob, thank you so much for invaluable input. We will look out to seeing you again. And thank you for everyone for listening. Danny also says it's a minefield, I think, the legal bit, the leases and everything. Obviously, something to be worried about for lots of people. Thank you so much. See you tomorrow, 8 a.m. to 9 a.m. Lakhi Singh drive time. The Lakhi Singh, the property fixer, alternative business and property solutions community. Tomorrow we have someone on, I think it is Mr. Mohsin Rabjani, a gentleman who's seen difficult times and it's got a lot of wonderful solutions about rehousing and trying to get people back into the working world. We'll speak to him tomorrow. Take care.